Hi, good morning. It's Mary Ellen McGonigal with MEM Investment Research. You're watching the MEM Edge Show, and this is the weekly show where we put you in front of stocks that are on the move. And it's with an eye, of course, as always, to getting you in front of stocks that are poised to trade higher. So what I'd like to do today is go ahead and give you an idea of what we're going to be covering today. We are, of course, in the throes of earnings season. In fact, over the next 2 weeks, we are going to see over 1,500 stocks that are going to be reporting their earnings. So quite a bit in front of us on that front. And so today I'm going to do a quick review of where we are in the markets currently. And this is always important. Not only generally speaking, you want to be looking at stocks and owning stocks that are in strong performers. By that, I mean areas where the performance is greater than the broader markets. You want relative outperformance behind you. So we'll take a look at where we are currently in the markets. And it is also with an eye toward earnings season, because as such, when you are looking to where you own your stocks, or perhaps even looking to get in front of stocks prior to earnings, you do again want to have that strength in your back. A lot of the reasons for that strength, you want to make sure that it's going to carry that stock going forward. So we will go ahead and take a look at that. And then also today, we are going to be taking a look at earnings last week, just a couple of the big winners that came in, what the common characteristics among those stocks were. Now, last week was not nearly as vibrant on the earnings front, but there certainly were some telling signs as far as what we saw, which stocks responded more positively last week. So we'll take a quick look at that with an eye toward what to look out for going forward. And then lastly, I want to take a look at some stocks that are really setting up nicely going into earnings. So we'll take a look at some of the bigger as well as some of the smaller names that are due to report earnings this week. Also, again, with an eye toward looking for stocks that could experience not only just a pop, we want stocks that have the groundwork to expand and do better longer term as well. So that's what we are going to go ahead and do, take a look at today. And the first item that I wanted to show you, for those of you that are not tuned in to the importance of earnings in as being a driver for a stock's price, what I have here is a weekly chart of Align Technologies, ALGN. And quite simply, I'm taking you back, oh gosh, almost 18 months. This is the beginning of 2017. In essence, the beginning of an 18-month move. This, of course, is that correction, the beginning of this year. However, the arrows are pointing out to you the week that this company reported earnings. So two characteristics that I want to point out to you with this particular chart is the fact that the earnings, in fact, are the driver. I'm hoping that you're able to see that, but also important is the volume. So when these companies come out, they report earnings that are positive, they are ahead of earnings estimates, and the outlook looks promising. Oftentimes, that is going to be the beginning of your extensive in these bigger movers. So here we have your first positive report, beginning of 2017. Take a peek at that volume on that report. And then they report their first quarter of 2017. This is Align, of course. And again, we see a big extensive move here on volume and so on. So each of these big moves on these weekly charts are coming in hand with earnings, but more importantly is the move beyond that particular pop, if you will. So you can see how significant the earnings are in driving a stock higher. Let's take a quick look at another example. This is another 18-month big mover, RNG, Ring Central. Both of these are stocks that are from, I do have a biweekly newsletter that clients can experience, where not only do we discuss the broader markets, also we drill down and give ideas on the stock side. And these are two stocks that we picked up quite early, but again, the big driver here was that earnings. That was your first sign that the stock was exhibiting signs of growth, not only currently, but going forward. So we did see a shift as far as the stock then entering into an uptrend. So again, I'm pointing out with these arrows, each of the last 5 earnings releases. And again, keying in on how the markets respond. Are you getting this volume? Because this volume really is indicating to you that institutions have noticed the profile change in that given stock, that they've come in with earnings. It may be oftentimes with IPOs or newer companies, their first positive report. And so institutions are now going to be interested. They do come into the stock, and that's what's going to continue to propel the stock higher. Not only the promise of a higher growth profile, but also, again, the fact that these institutions have come in and are now interested in that stock. So I did want to make sure, for those of you that are on the fence as far as the impact or the importance of earnings, it really is the number one key driver in these stocks, in these big winners. So let's go ahead now. I talked about taking a look at where we are currently relative to the markets and where the strength is currently. And I like to do this each week. It's a wonderful snapshot of each of the various market indices as well as the ETFs. This is called Candle Glance, and it's accessible from that initial interface page from Stock Charts, where you can input up to 12 ticker symbols. And for my work here, what I've done is I've put the S&P, the Russell 2000, the NASDAQ, also the Dow Jones Industrial Average, as well as the primary, what I call primary select sectors, those that are more dominant in the broader markets, for instance, technology, healthcare, consumer cyclicals, and so forth. So what I've done here is taken those various indices and sector ETF group graphs and overlaid an RSI, that's a relative strength momentum indicator. And so we're looking at a snapshot chart. This is 2 months. So you have any number of indicators that you can overlay on here if you want to look at money flows and so forth. But for my work, I'll do the RSI, relative strength indicator, and then sort this list descending so we can immediately get a feel for where the strength is currently in the broader markets. And interestingly enough, the first chart that shows up here is consumer staples. And this is a sector that over the last 5 weeks, we have watched an evolution of sorts, where the first week we were running this, it was down here as a laggard, if you will, but it has slowly progressed so that it's now in the forefront. Now, is it the absolute strongest sector? I would argue no. We can go ahead and take a look at a larger graph of this sector group graph to give you a feel of really where we are for those of you that are tuned into sector rotation and so forth. So we can see this is this pickup. This is a weekly chart of the consumer staples. And you can see that over the last 6 plus weeks, we have seen a bit of a turnaround, but we are at a period now where this indice very well may find resistance at these downward trending I put up the daily here to give you a better feel. This is your 200-day. So we need to see a break up above that. But realistically, staples are not a big component of the broader markets. We are in a period where growth stocks are being favored, but it is worth noting that there has been strength here, and it is warranted strength. There are the consumer staples is, as far as stocks where sectors where they're coming in ahead of estimates, staples are second on that list, but I don't want to spend a whole lot of time there. More to the point, what I wanted to point out to you outside of that is where there is strength in the broader market. So we can see that the NASDAQ has very much shown its hand as a leadership industry or index. This tech laden index was the first of the broader indices outside of the Russell to hit a new high in price after the correction earlier in the year. So we are seeing continued strength within the NASDAQ. Technology shares just keep powering. This is XLK, the technology ETF, continues to power to new highs. And then we drill down to the S&P and cyclicals. So I will tell you that currently in the broader markets, technology and cyclical stocks are where the strength is. And by that, I mean the underlying stocks within those sectors have the largest number of stocks that are hitting new highs, that are powering ahead. So the reason I'm pointing this out to you again is as we go into earnings, it is going to be helpful for you to be keying in on stocks that are in these stronger areas because they are stronger for a reason, and primarily certainly within cyclicals, they were last to report Q1 earnings, and a large number of retail and consumer driven stocks really came in with superior earnings, and they're continuing to outpace the broader markets. And with that, let me just take a minute to review what we saw last week, because it is a broader market picture and with an eye toward what will drive the markets going forward. So last week, as it relates to consumer, we did get some very strong economic reports. Retail sales numbers were very high for June, but they also revised May retail sales numbers quite a bit higher than where it was. So with what we are seeing here is continued strength in retail sales, and there also is a continued expansion in consumer spending. It has picked up significantly. So with that in mind, there are areas of the market that are going to benefit from this pickup in consumers opening their wallets, and where, so we will drill down to some names within there. And then also last week, we did see a little less than 20% of the stocks in the S&P 500 came in and they reported their earnings, and over 90% of those companies that reported came in ahead of earnings estimates. So that's really quite strong, quite powerful. And then also we are seeing a record number of companies that are reporting, record-breaking profit margins. All of that has to do with the tax cuts. So we're really in a very, very healthy backdrop as far as the broader markets. But let's go ahead and drill down and take a look. What I'm going to be doing here initially is reviewing with you last week. I talked about we did see earnings last week, and we did see a bit of a theme relative to those companies that report it. So last week, the biggest performers, if you will, and by that I mean responders to positive earnings, were small regional banks. So here is an example. This is Oriental Financial Group. It's a $700 million regional bank. I'm going to be bringing up the weekly here so you can see this gap up here was in response to strong earnings. The stock popped 9%. They did come in 75% above earnings estimates. And the reason for that is for this particular company, we're going to be reviewing others as well. IBKC is another. Last week regional earnings, a regional bank that came in with earnings that were 20% above estimate. The stock popped 10% for the week. And this is a $4 billion bank. It's Iberia Regional Bank that came in. And let's take a look at one last one. It's FFIN is the ticker symbol. I'm showing weekly price charts. Let's see if we can do that properly here. And this is another regional bank, First Financial. It's a $3 billion bank. The stock popped 5%. It was up more for the week, but 5% on earnings. So thematically, what I'm pointing out to you is the fact that these regional smaller banks were your biggest winners. Not only from reporting strong earnings, but also as far as the markets and investors' response to those strong earnings. And it's twofold as far as the reasoning for that. One last one is INDB. This stock was up 12%. And it's Independent Bank Corp. So twofold for the reasons as far as these pops and these big responses to these earnings. The first is the fact that with the recent tax cuts, Trump induced, these regional banks are in place and poised to benefit the most from these tax cuts. They have a loophole, if you will, that will help them benefit even further so that their tax advantages can be almost up to 35%. So that's one reason. I'm going through the earnings release and the transcripts, and a lot of it is tax related, but also there was an initiation so that the regulatory boundaries with these smaller regional banks has been reduced so that they can cut cost. They don't have as much in the way of regulatory paperwork now. So that's two things. But the third very important reason that these stocks are doing well is they're seeing tremendous new loan growth. They're seeing a lot in the way of strong new loan growth. I talked about consumers opening their wallets. The consumer confidence is at a 17-year high. And so when you see that, you will see more in the way of lending activity. And it's not just consumer, it's commercial as well. A lot of small cap stocks are doing really quite well. So this is something that we did see last week. There is a third reason that these banks are responding so positively to these earnings reports, and that's the fact that the financial sector has been really on the back burner recently. Let's take a quick look at the XLF. This is the financial ETF. And what I want to point out to you here is this relative unperformance that we have seen prior to last week's move. Last week, financials were up 2%, so they did begin to potentially reverse this downtrend. But really, you can see how, particularly from May through the beginning of July, financial stocks really fell under the radar. They underperformed. And let's just take a quick look at technology as a comparison. This is that same time period. So you can see that tech has charged two new highs, but the financial sector underperformed. So the reason I'm pointing that out is these stocks were, this is the regional banking ETF. Again, you can see that underperformance. So a lot of the stocks that reported last week were languishing. So they were prime and ripe for the picking. So with that in mind, what I wanted to do is I've highlighted, after going through those many stocks that are due to report over the next couple of weeks, I cherry picked 3 stocks that will be reporting this week. They are regional small banks that could also benefit not only from that financial backdrop that I talked about, but the fact that these stocks were forgotten, so to speak. They did not rally heavily into their earnings, so they could have more potential upside ahead of them. So this first stock that is due to report this Thursday is ticker symbol CFR. And the stock is Cullen/Frost Bankers. It's a Southwest regional bank, $7 billion in market cap. And a lot of times what I like to do during earnings season is take a look at how the company has reported, how they've done historically, And this is their earnings release back in the end of April. This is their first quarter earnings release. We're looking at a daily price chart, and you can see that the significant advance subsequent to their Q1 earnings. So it does historically, this is another release of earnings back here in the beginning of 2018. So there is an historical precedent where the company can actually come out with earnings and respond positively. The other thing I like about this stock, again, is the fact that in line with the indice, it has underperformed. So it does have that potential to pop going forward. Your RSI is positive. Your MACD is just entering into that positive territory. So let's take a look at another small bank, CBU. This is Community Bank System. It's a $3 billion Midwest company, and they're due to report today. And you can see actually they are up 2%. And I apologize, they may have reported already. But also what I wanted to point out, in those companies that reported last week, those banks, hopefully you were able to see that they are still advancing this week. So it's not a one-off. This is their last earnings report here. And again, you can see the company historically has come in above estimates and been able to advance. And again, same dynamics. RSI is positive. MACD has just turned positive. We'll take a look at one last smaller regional bank that will be reporting. This is another bank reporting on Thursday. VLY is the ticker symbol. It's a Northeastern regional bank, $4 billion in market cap. And same dynamics in the sense that it has not had this huge rally going into earnings. It's just now starting to potentially reverse this recent downtrend. RSI is trending positively. MACD just turned positive, and a very similar dynamic as far as their last reported earnings. So I wanted to take a minute there. My gosh, there's so much more that I do want to cover. So let's move forward, because there are a number of large companies that will be reporting this week. As you know, a number of the FANG stocks are reporting, Amazon, Facebook. Let's go ahead and take a look at Amazon, because they are such a bellwether company. And when we look at Amazon, a lot of people view that as a consumer related stock. And of course, they do have a huge presence as relative to retail. But it's really important to know that the cloud computing is a huge part of their earnings. And for those of you, for instance, stockcharts.com is moving to the cloud, and they are a client of Amazon's web services. But what we are looking at here, this company is due to report on Thursday. So what I wanted to point out to you here is the fact that the earnings for Amazon, they are expected to grow by 525% over the prior quarter. And that is huge for a behemoth company of this size. And again, a lot of that growth is in their web services. Of course, they are seeing tremendous growth on the retail side as well. They just experienced their Prime Day, which was a huge success. But taking a look at the stock going into Thursday's earnings, you can see that it has had a significant run. This is their last quarter. They gapped up huge volume on a big earnings report last quarter. But more recently, the stock has, for the most part, been in a very healthy uptrend. So ideally, what we would like to see prior to Thursday, we did get a little bit of a pullback, but you can see we're still early into the day, but buyers did come in and support the stock. But it is a little extended. However, if you own shares of Amazon, you could potentially add it going into earnings because of how constructive the stock does look. It's very, very positive looking going into earnings. Let's take a look at another large tech company that will be reporting later this week. It's Twitter. And we can take a quick look at this Now, this is a little more compelling to me because of the fact that the stock is really marking time going into earnings. And I can show you an example of other companies that have done this. But the stock is actually, they're expecting the company, the earnings to double from last year. And they're also looking for revenues to rise over 22%. So very, very strong, healthy numbers. And there was a drop here, trying to see when that was, July 19th, on reports of reduced users because they suspended a number of accounts that were lying dormant. But the fact of the matter is that this stock is now in a flat base, making it quite constructive. Let me just point out to you another stock as an example of what it looks like when companies go into earnings, coming into earnings with a flat base. This is Etsy. They reported already back in here, but you can see that prior to that, the company actually sold off a bit. I'd have to think of a better example, but going into earnings with that type of flat base can in fact be very constructive. So what I wanted to do outside of those regional banks is show you a couple of other stocks from last week that did really well on their earnings. And again, very well founded. This is Heartland Express. It is a trucking company. And again, you can see the dynamics where it's up over 2.5% today. So capturing these stocks that have these extensive moves following strong earnings, you will see it's not going to end right there. So this is, the company was up actually over 10.5%. Their earnings were 22% above estimates. And so this stock is really a turnaround story. But when you get this type of big advance, they come in well ahead of estimates. Then you have analysts come in and they start revising the estimates going forward. The markets pay attention, they sit up. So it very well could continue to move on. And the story for trucking, as well as another, let's take a look at another big winner last week. CSX is a rail stock. And this company also, this stock also had a significant move last week. They came in 16% above estimates. Both of these are going to be movers. We talked about, as far as movers of product, we talked about retail and consumer spending and the expansion in the economy. Durable goods sales are high. So there is going to be a need to transport these goods. So the fact that these stocks are rallying in an expanding economy is sound. It makes sense. So that backdrop that I'm mentioning to you is the type of backdrop that will continue to propel the stock higher. So when looking at these rail stocks, CSX is the leadership stock in this group. It's shown its hand. It's hitting new highs. It has the strongest growth prospects and growth numbers. And then what I wanted to do too is point out to you another area of strength. It really languished a bit last week, but it is picking up, and that is biotech stocks within healthcare. Hopefully I'm not jumping around, but I do need to end here very shortly. I wanted to make sure I got this out there. The fact that biotech stocks are looking rather constructive and holding in there. So one last stock that we'll take a look at that is reporting this week is Biogen. And you can see that it did already have this extensive move July 6th when they posted positive results for one of their experimental Alzheimer stock products. And so what I wanted to point out, we're looking at a weekly. I'm going to quickly put up a daily, and we'll have to end it here, but really wanted to point out to you just how constructively it's behaving following this huge gap up. This was about a 14% move, and the stock is holding up really remarkably well above its 10-day simple moving average. Your RSI is trending positive, as is your MACD. I will end it there. Stay tuned. Next week, we are going to do a lot more as far as where we are, earnings, and what to look forward to going into next week. Good trading, everybody. See you next week.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.